There we go. Now it should be good. How you doing, Cedar?
I am good. How are you, D. Cruz?
Good, good. I'm doing well. I'm doing well.
Perfect.
Today,
Well, we're doing a mind over matter, which is mindset coaching for trading, which, there's a little technical stuff that goes into what we talk about, but we really try to focus this, what we're doing through this time, other than if, somebody needs to hop on and alert a trade or something, if, one of the analysts are in voice, if they're taking an exit or whatever, but we're trying to really have this be focused on what we're thinking and doing, what our actions are in relation to our trading accounts. And the one of the things I was thinking about today was back to when
mhm.
I was full porting, when I was 25% porting. I started at 25% and all of a sudden I was at 50 and then 75% and blowing accounts.
Oh yeah.
And for some people, that's
And,
$1,000 or $10,000 or 50,000 or 100,000. And I
mhm.
hear it all the time where it's like, I'm devastated.
Yeah,
And then they just keep trading, which is what I did too. So I want to make sure that people understand that, like, we've all been where you are to varying degrees. And Thor and I both have lost enough money. We were talking about that when I first came back into the server, and it is a significant amount of money. It's not 100 grand, and it's a lot more than that. And when you go back to, his was in the 90s, mine was early 2000s. It was significant. And what my thought was is the only way that I'm going to dig myself out of this hole is to figure this out, not to just roll over. And it's, like, not keep trading with real money, but learn what I'm doing wrong technically, because I obviously did not understand technicals as well as I needed to. But once you dig into that, it's pretty quick. It was the management, the impulse control, the um, like learning about yourself, learning about what your weaknesses are, and all of your weaknesses that show up in trading, or they're your weaknesses in life too. It's just trading tells you. Now you've lost money because of that weakness. And so I think maybe going into how, after you've taken a huge drawdown, after you've taken a series of losses or one large loss, what's kind of a good way to crawl back out of that? Because
yeah.
it's not
I'm
just a few
definitely.
people. It's a lot.
Hmm.
And
Oh yeah, no, we definitely all been through it,
for sure.
and it's part of the learning curve, and one of those things that you got to really teach yourself, right? But I mean, for me, every time I take a loss, it's really important to just sit back and make sure you're seeing things correctly and just kind of not getting ahead of yourself and not revenge trading. You kind of just, you wait for even extra confirmation, if you will. Especially after a large loss, you really want to get, that first play back. You want to get some green back. So you don't want to rush into a play. You want to kind of have extra confirmation, and just, go with the really solid setup. Don't go with the mentality of trying to make it back, if you will, because that's how you kind of dig a deeper hole
Oh, you
sometimes.
you oh no, not sometimes. I can't think of a time then that it ever worked out that way.
Mhm.
Like, ever.
Yeah. Oh yeah.
And I'm
Right.
sure I'm sure if I went back and, like, went through journals, maybe it happened a few times, so then you're all excited because it happened, which is,
Hmm.
I think, where in hindsight, I should have set myself a daily loss limit like they do in some of the combines for the prop firms, of, if you're
Right.
trading $100,000 account and you lose more than 5% on the day, which would be a lot, but more than 5% on the day, you're done trading. It's done. I don't care if
Hmm.
that's at like 5 minutes after market opens because you opened up a swing and you're like, well, that didn't work.
And
Minus
that's how you get
97%.
better and more disciplined. Hmm.
And it's going to go back to the discipline. So setting yourself a daily
Hmm.
loss max so that you don't continue to dig that hole. And it's actually, now that I'm thinking about this, when we went out camping this weekend, there was a lady traveling from New York in a front wheel drive, one of those conversion vans, little microwave and bed and stuff in it. And she'd gotten herself stuck.
Hmm.
And it was pretty stuck. Like, it was definitely. And so another family drives by, and he's retired state police. And he's like, I've got my half ton. I'm going to pull her right out. And he was sunk. Boom. Downhill. It's like chocolate pudding. So then another family comes in with a 1 ton. and boom, he's stuck. So half an hour later, we drive in, pulling the horse trailer. And I'm like, oh, we're not going over there. Like, you can't, drowning people drowned you. Like, no, hold on. We'll go over and help, but we're not going to pull anybody out because we don't know what the footing's like. We're not going to do that. But the only reason that we knew not to do that is because we have been stuck enough times, which is the same thing with trading, where all of a sudden they're like, oh, you can go past. I'm like, no, I'm going to the right. I'm going over here. I'm going to veer around that.
Exactly.
So digging them out eventually took a winch. It didn't even, you couldn't dig out like with tree branches underneath the wheels, stuck. And it's because the wheels keep spinning, right? You keep trying, you just dig yourself in a deeper hole. And it is exactly the same as being sunk up to the pumpkin completely. And what I told him is, oh, that truck's just barely stuck. I've been stuck where it's so deep dug in that you couldn't even open the doors. You had to crawl out the sunroof on the top, which is probably a great analogy for trading because they can get out their doors. I would rather you stop where you can still get out of your doors and then either call a tow truck or if somebody has a winch. And I think of myself as the winch, right? That's the whole, for trading psychology. That's why when I first came into the server, I was like, all right, I'm going to provide as much help as I can because I've been where people have been to an extreme nature. And I'm on the flip side of that. So if we can help people understand that you don't just keep digging, you don't want to sink it all the way down so far that you can't get the doors open. And if you do that once or twice, you probably don't do it again. It's a hard lesson. I'd rather you not spend that money learning that lesson. But if you're a hard learner like me, and you're finding yourself in this spot right now where you're like, I don't even know what to do. I would say 2 weeks of no trading. And that doesn't mean no learning, no practice trading, 2 weeks of no real money. If you've taken a large drawdown, and I've got a couple DMs lately that like full ported SPX stuff that I'm like, why would you swing into a 0-day SPX and you've been trading for 6 months and it was $100 grand or 50 grand or your last $500 or, whatever that is. You need to stay away from SPX. And if you have experienced a large drawdown, stop putting money in because it is that same thing as like pedal to the metal. All, even if you got 4-wheel drive, they're all just spinning and you're just there, just hanging out. It doesn't help you move forward. What helps you move forward is not having the emotion of having money on the line and rebuilding your confidence. And that's where, if you haven't done sim trading, and I still sim trade, I paper trade. If I'm like, I'm curious about this, but I'm not familiar with that. And I'm kind of a 50-50. So I'm going to trade it based on what I would if it were real money, but in a sim account, and see if my thesis was correct. And the next time I see that kind of setup, I'll have a better confidence. I'll have a better understanding if I was seeing it well. Because that's what it comes back to is following that pattern. Because you start to see the patterns and go, oh, I've seen this before. And nothing like repeats, but it definitely rhymes. So as you start to see those setups more, the more you can trade and build that confidence back up when you come back to trading real money. And if it's a large drawdown, I'm serious, 2 weeks, because the wound will be slightly healed by that point. And hopefully the lesson learned of don't full port anymore, done. And full port is, there's different concepts, and I hear this tossed around all the time. I personally think that term should be one of the bad words in the server. Maybe I should like DMC blast about that, where posts are just deleted. Because if you have $500 and that's your last $500, you should not be trading that $500. You should be practice trading and continuing to add to that, because very few people can take a $500 account and grow it well. Because that really should be like tiny trades, like $50 trades.
Really hard to build small accounts.
It is. So better to be protecting that capital, to focus on capital preservation and learning and growth, than tossing it back in. Now, if you've got your retirement accounts nice and set up, you've got, like, I don't know, $100,000, like, well, I think this will be my trading account. That's your full port, because you've got your retirement account. You're not going to trade that, or you shouldn't, at least until you're much more experienced. If you've got 100 grand of what would be considered, it doesn't affect your house payment, it doesn't affect anything you're doing in your life, and I'm going to have this be my business, which is what you have to think about it. Stop talking port. It's your business. And you take that $100,000, if you put all of that on the line, it's gambling, it's not a business. If you take that 100,000 and you could take this to 10,000 or a million, whatever money you have, and go, all right, even though on $100,000, I could take 5% of that and take what would be considered a well-managed risk, meaning that I'm not oversized. Why not start with one contract? Because the difference between sim trading or paper trading, sim trading, I guess, is more for the futures group, and paper trading is for the options group, but the same idea. It's fake money to build what your understanding is. As soon as you go from fake money to one contract, even though one contract isn't a lot, say on something like a $100,000 account, there's a different emotion in there. And what you have to track is, are you making any different decisions based on the fact that it's real money? And for some people, there's two different courts that happen here. One is, I don't respect my capital, so it doesn't matter if it goes to zero. The other is, as soon as there's money, my heart's racing, my palms are sweating, like things are serious now. Then you do not increase that percentage until you can just relax and be like, click, oh, okay, next thing, oh, next. Because if you do, that's when you start blowing up. So seriously consider large drawdowns as you've got some time out. More importantly, making sure that you have developed your trading rules. And if you don't have your own rules or any idea what that means, you can go see my staff introduction. I've got 4 posts because of the limitation on Discord, but my trading rules are in there that are my like basic from years ago, just like stop doing this, don't do that. Like here's the things that I follow, and maybe take some of those, add some other things. If you have broken trading rules and that has led to you blowing an account, that 2 weeks off is absolutely necessary, because you can't blow an account if you're trading with good risk management. Because even if you're in a 5% position and it goes to zero, you're still down 5% on the day, and then you just don't trade more for the day. I mean, ideally, that's not what happens. Good risk management dictates that you don't really blow an account in a day or a week or even a month. However, if you're kind of in that mix where you're moving forward with what your performance looks like, and maybe, you know, you've taken like, all right, I gained on that $100,000 account, I'm up $3,000, and now I got a little more risky because I was feeling good about myself, and now I'm down 2,000. So now it's at 98,000. If I broke a rule, like what you should say to yourself is, the first time I break one of my rules, and you've got to get them in writing, and you have to answer them with each trade. If I broke one of my rules today, and I don't care if it was profitable or not, if I broke one, I don't get to trade tomorrow. You could be up 20% on your report, but if you broke a rule, you don't get to trade tomorrow. And of course, because you don't have a risk manager, it has to be you. You're accountable for your business. You have to follow through on that. The second time I break a rule, I'm not trading for a week. It is so hard not to trade for a week, and you have to enforce it. You have to. Or you hand your login credentials to your spouse or a friend or a family member, something along those lines, and be able to be accountable to them, where they change your password and you don't get back in for a week. And it's unfortunate, but sometimes that's what needs to happen. Time number 3, it's a month. And I don't know about you, but I will die if I don't trade for a month. It would be the end. So for me, that installed enough pain to go, all right, I'm not breaking rules. Even though it's a loss, I'm going to take it and just like cut my loss right there. I'm good. And it seems very severe to do that. But once you've taken a large drawdown, if you don't install really it's a stop loss on yourself, right? There's going to be a problem, and then you will not be trading anymore. And the best possible thing, if you cannot install your own stop loss, is to stop trading. And I am not I'm not saying if you took a drawdown, you should stop trading. What I'm saying is the drawdown is right now, it's time to get serious about how you're managing your trading business and about what your rules are. And the term in our house is next time, don't. Right? Would you do that again? No, next time, don't. So maybe that's one of the post-it notes that goes up. Just one post-it note. Next time, don't. And then you got your list of things, because it reinforces, here's what I'm obviously not trading well. I'm not adding, I'm not whatever that is for what your habits are that are creating your drawdowns. And there's not a lot of different ones, right? We all kind of do the same thing, but
so you guys definitely got to accept that there is losses in the game as well. Like you're not going to win every single trade. And if you think like that, then your account is going to get blown. So just accepting the losses and just knowing when to cut a loss is huge. If you guys could get through that, I mean, that's how you preserve your portfolio, right? So you guys, whenever you have a validation, right, for a trade, you're looking at it and you're like, okay, if it breaks VWAP, that would be my entry. So your stop loss should definitely be like, or invalidation point if it loses VWAP. And you guys should be sticking to tight stops whenever you guys are starting accounts, because I mean, there are things. You could salvage losses, right? And as long as you keep it salvageable, then you could easily just kind of laugh off that loss with your portfolio and just put those funds into more confirmed play with more validations and make them back. And yeah, that's very recommended in learning. And once you guys do learn that, you guys will start seeing an increase on your portfolio, and also it being preserved. Even in like a red day, it's not going to be a big red day. So you guys, if you guys could start controlling losses, I mean, yeah. That's huge.
I mean, it would even be to do like 25 to 30%, even if the analyst has not alerted their exit, again, because our risk tolerances are probably a little bit different from person to person, or I would hope they are.
Oh, absolutely.
So even if an exit has not been alerted, I think as a newer trader, you should have a trailing stop set up that, like on TOS, it's super easy to put. You took a $1 contract, I'm going to put a 25% drawdown on that, and you do not change it. And if you get stopped out, you get stopped out. It is so much easier to re-enter once you're out of a position. If you're like, all right, well, I was worried, I stemmed the bleeding, but now I can re-enter with a clearer mind instead of the hopium of hold it, hold it, hold it, hold it. So I think what D Cruz just said, like, get your stop losses in there and don't be waiting for somebody else to tell you what to do with your business. It's your business and you need to guard it fiercely.
Your portfolio, your money.
Yep.
When does anybody ever else like tell you what to do with money, right?
Like, well, a lot of people try to tell you what to do with money, and unless they're in the trenches up to their elbows in blood and guts and mud, you should be like, oh, thank you, right? And then shrug it off, right? Just say, oh, thank you. And you know what they say in the South? There's some different meaning behind that, but it's all good. It's okay because you're going to have people give you advice. What you want to be careful about is who you're actually taking to heart, because there's been times when somebody says, oh, I have a stock you should invest in. I know you're into trading and, there's something you should just look at. I'm like, all right, I'll check it out. And then they'll ask me, well, what do you think? I'm like, well, here's my chart. I am not a participant here. And they're like, but wait. And I'm like, well, I just know what my risk tolerances are. And I've looked at a lot of charts through the years and it's just not for me. But if you like it, let me know how it goes. Like, I'll set some alarms and check out how your trade went. And most of the time that thing just kept going down because, like a couple of things that we charted yesterday was like, yeah, we're not touching that. So people trying to be helpful, trying to tell you, oh, here's the next thing to look at because I know you're into trading. You have to steer away from that. You have to control what your input is. So really, I learned a long time ago that anyone who's not going to be at my funeral, I don't really put much stock in, and I hate to say that. Stock, such a funny term. I've said that for a really long time. If they'll be at my funeral, I will stop, listen to what they have to say, consider if it's appropriate for the situation, and then decide if that's going to help me move forward, or if their context, if their understanding might be a little different than mine is. And I'm still going to say thank you for your feedback. I appreciate, but it might not change what I'm doing, because you have to be holding what you need to hold mentally and physically, or we end up in trouble. That goes for things like FinTwit. And I'm serious, like, be careful that when you have a huge number of people you're following because you want to just get as much information as possible, things get more and more diluted. The water gets murkier, which also, thinking of analogies, I'm all about analogies. I love the ocean, and like, no joke, dream about it. Thought I was going to be an oceanographer, like 9 years old. Strangely, I'm here in the desert with no ocean around me. But when I go to some place like Playa del Carmen that has a lot of the cenotes, the fresh water comes out and mixes with the salt water, and it becomes obscured. And I am a scuba diver. Love about 60 feet down. Colors are still good right before you go into the blues. As soon as fresh water hits that salt water, it gets murky. And then I'll just float on the top. I don't want to be diving. I don't even want to be snorkeling, because it's just kind of mushy looking. Everything is mushy looking. The more you listen to tons of people, the more it's like that brackish water where the fresh water comes out from the cenotes into the salt water. And now your vision is not clear. So be very, very careful what your media diet is. And that's the reason D. Cruz and I have started to do this, Thor and I have started to do the charting, is we want to try to give as much insight as we can to our members to kind of cut through the crap, I guess, is the best, the best phrase, because there's so much information out there, and you can be following somebody and the concept is good for them, or at least you would hope if they're talking about it, it's good for them. But it might not be good for you, because it has to be actionable for you. And if you're following 15 different people, and that's probably a understatement, but 15 different people, it's all over the place. And it becomes less and less clear the more all over the place you are. So really fine tuning back into that. But yeah, drawdowns. That was my main focus, at least at the beginning, was the drawdowns, and then off onto the tangent of salt water and fresh water. This is how I work. This is stream of conscious in my brain. You guys are getting to hear it. But all the things that I wish I had learned sooner, and maybe somebody told me, I don't think so. But I'm trying to save as much of that capital as possible for those that are new or those that are struggling, in the hopes that maybe it's not quite as much as I lost. So I'm trying to think if there's anything else. That was really all I had planned, was just, talking about the drawdowns and the clarity on what you should be focused on. D. Cruz, I'm curious, when you first started trading, how many people were you following? How many rooms were you in? Or, yeah,
I
because
was
you
following kind of way too many, and I didn't really
Kinda.
start making money until I started doing things on my own. I mean, there are times where I was even, just you'd get on, wake up, get on Twitter, and everybody's like so, to one side, right? So you're even like, well, I mean, everybody's kind of seeing that, so they have to have something. And then, yeah, surprisingly, they're all wrong
all
a
of them.
lot of the time.
Yeah,
And you're just like,
99% of
wow. And it's just literally like, you got to look at that as all like a cult. They see one thing and they're like little, like literally brainwashed. And they're like, oh, the markets are doing this because this guy that has 200,000 followers said this. And this guy that has, he's been,
Yes.
no. You got to look at the market. You got to play the charts every single day. People try to play the news all the time, and that's where they screw up, like number one place. So you just literally have to just look at the chart, see what the chart does, how the chart reacts. And yeah, but I was following way too many people in the beginning. And then I finally just said, you know what, screw this. Like, why am I leaving it up to them to make me money whenever all they do is lose my money and it's my money. So then I
Well,
started doing my plays, my TA, and yeah,
that's when it gets
went out
better.
from there.
That's for sure when it gets better. So, not saying you shouldn't listen to people, but I want you to really be focused on, do I need to have all the people that I'm following right now in my list? Do I need to be getting feedback from everyone? I don't know. I would definitely consider paring it down because they kind of parrot each other in a way that is unfortunate, that they want to be also right. Oh, I'm going to be right. I'm going to hop on that bandwagon.
Yeah.
Right or rich?
Just
Two
stay away
hands.
from all of it.
Yeah, right or rich. I don't care about right at all. I'll let my TA play out what my thresholds are, but I really don't care about being right. And so the more successful you are in business, the more likely you are to struggle with trading. And I know I've talked about this some before, but not really in our psychology discussion. In business, it's all about execution and right decisions. In trading, your trading business, it's about the execution of not letting things get out of hand. And it's the polar opposite of running a brick and mortar or another type of business that's not a trading business. And that's something very seriously to look at, because I am right in my regular business a lot. And when I'm wrong, I own it, I move on. But if I keep being right, I make more money and try to minimize the wrongs. In trading, fine. If I'm wrong, cut it. Okay, good, move on. So it has a completely, like, it's the flip side of being in business and being successful. So that's, yeah. Because working harder in business means I'm more likely to be successful, working smarter especially. And in trading, the opposite. The harder you work at it, the more you go back in. What D. Cruz was talking about before, that revenge trading, that over trading kind of concept, like I'm going to make it back, is how you lose more. In the regular business world, it's not. That's how you fix things. So we do not fix our trading business the same way we fix a brick and mortar or a regular business.
Yeah, I like to say the stock market. I mean, if you're not humble in the stock market, it'll definitely keep you humble. So
It will make you
keep
humble.
that in the back of your mind, you guys. Yeah.
For sure.
Then you're sitting there with jaw dropped, like, wow, what did I do? Right.
Yeah. Clapped. Bam. Yep.
Mm-hmm.
Okay, well, looks like we're at our 30 minutes and I have an appointment starting. So I will upload this video and put it in the psychology channel to re-listen or to listen for those that have not heard it. So I wasn't sure we were going to keep finding stuff to talk about because I've got so much content already, but I feel like as you and I talk through the week, it just kind of continually progresses. So we'll just keep doing it as long as it's helping people. So if you guys have found this beneficial, let us know, because we already know it. That's why we're talking about it. But if it's beneficial for you, it's helping you in your trading path, which is definitely it's not a destination. 21 years or from here, for me, it's still a destination. I just have learned a few things along the way that I'm hoping to share. And D. Cruz obviously definitely taken the punches and survived it. And strangely enough, we have a lot in common. A lot.
Yep. Small world.
It
Very
is.
small world. And it'll always be a small world, I guess.
For sure. Okay.
It's pretty crazy.
We'll see you next week.
Yep. We'll talk to you soon. Have a
Okay.
good day.
See you later.